Okay, by my clock, it is 8:02 Pacific, so we can kick off. Hopefully all the attendees can hear me, so welcome everyone to our main meeting of the Yankee Model Investment Club. To those that are joining us for the first time, thank you for the interest, and hopefully you'll stay on with us for the rest of the call to see how we operate. For those that are returning, thank you for the continued interest. Hopefully we'll make it worth your while. My name is Brent Gall. I'm the president of the investment club. We're a fairly small club currently, but always looking for new members. What I have up on the screen now is just a couple of slides to give the base structure of our meeting. And then after this, I'll bring up the agenda that we tend to follow for each meeting. Okay, so this might be repetitive for those that have been with us before, but the Yankee Model Investment Club, it's a better investing model club. We're fully functional, we operate with real money, but we are open to observation by the public for educational purposes, with the intent of maybe someone wants to start their own investment club with friends and family, or if you want to join our investment club, we're open to new members. We were formed back in 2008. We currently have 4 members spread across Connecticut, Massachusetts, and California. We went online exclusively in 2011, and we've been meeting each month on the second Saturday at 11 a.m. Eastern. For new members, like I mentioned, we're always looking for new ones. No investment experience is required. Any new members are mentored by an existing member, so the procedures and the techniques that will be demonstrated during today's meeting is not something that you need to come with that expertise already. It's all kind of on-the-job training, for lack of a better term. And really, there's no limitation on where you live, except where the state tax laws requires the club to file a return. So unfortunately, if you're in one of those states, you're welcome to continue to observe, but we don't allow membership from those states. All partners in the club must be members of Better Investing. You're expected to actively participate in the club's activities, so this isn't a passive investment where you put in a monthly fee and then just let the value accrue. And you're also required to make stock presentations using our stock selection guide, which you'll still see momentarily, in rotation with other members. And the more members we have, the less often per year you have to present, which is always nice. General operations of the club, we follow Better Investing principles. We do show respect for fellow club members. We're also learning. None of us are experts or claim to be. We perform annual audit of finances. We file tax returns promptly, and we follow our partnership agreement and bylaws. So if you have additional questions, we'll have a kind of a question and answer period during this session. Specific questions can be directed to Jack Finn there, or if you're interested in joining, let Jack know. So the structure of the meeting, like I mentioned, I'll show the agenda. We'll leave all visitors muted, but you can ask questions using the question box in the control panel, I think to the side of your screen. And then Joe, our organizer, will answer those questions as they come up, and if it's a widely applicable question, Joe can pop in and actually read out the question and the answer if it seems to be helpful to a large group of the members. Just a disclaimer, this is some legal jargon, but basically we are not financial advisors. None of the discussions that take place today should be interpreted as financial advice. You should do your own studies, do your own research, and make your own decisions. And then just in case you drop off early, like I mentioned, we do meet monthly, the second Saturday of each month. Our next meeting is June 13th, 11 a.m. Eastern. It'll be in the same webinar format. So again, if you have questions, contact Jack at that email address there. And with that, I will bring up our agenda. I can change it here. Try to go to one screen. So this is the agenda that we tend to follow every month. Welcome members and guests, we've done that. Call to order. And then we usually have a short educational segment that Jack will be presenting this month. Should I throw it over to you, Jack? Are you with us, Jack? We might have lost Jack.
He said he was having trouble with the internet.
No, I'm here. I'm back.
Okay.
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 I'll give you presenter rights, Jack, for the educational segment.
Yep, I think that'll be fine. Okay. Okay, can you see my?
Not yet.
Okay. I think I've shared it.
Yep, there it is.
Okay. All right. I'm going to talk about what I think is the hardest part of working with a better investing tools, stock selection guide, and that is the various pieces of judgment that we have to apply to each stock that we get, that we want to invest in. So, come on. Start with a Warren Buffett quote, always a good idea. Be fearful when others are greedy, and greedy when others are fearful. So that's, we're kind of in the greedy period now, where we should be greedy. All right, so where do we need help for the stock selection guide? Right off the top, on the first page, we need to fill out the growth rates for revenues and earnings. We also need to, on the second page, figure out current and projected PEs and trends in PE to figure out what we want to use, what we want to say that the PE is going to be to get to the high price and the low price in the future. And then we need to use those two things to estimate future prices. So we need to find help on all of these things, both what the things we have to input and the things we want that we are predicting, to make sure we didn't predict way too high or way too low. So for growth rates, there's a little bit of theory, not a lot, but just that businesses can only grow so fast, and we have to kind of put a damper on how fast we also have, right in the stock selection guide, trend lines for both sales and earnings per share that give us a long-term growth estimate. So that's something we can look at. Then we can also look at Value Line, Morningstar, CFRA, analyst estimates, and other data out there, Yahoo, that kind of thing. For future PEs, we can look at the current and projected PEs that are on the SSG and in Value Line and see if they're if our estimates of what PEs are going to become match those estimates. There's also trends in PE that are in, you can see them in Value Line as well as in the SSG. It's also true that PEs in general tend to decline as the company grows. That's not 100% true, but that's a trend. Future prices, we can look at fair values from S&P or CFRA and Morningstar and a few other places. And then value line gives us, in addition to projections for we're going to actually skip a few of these things. We're going to look at the theory, trend lines in the SSG, value line, and analyst estimates for growth rate. We're going to look at current and projected PEs in the value line. And I'm going to look today also at the value line 3 to 5 year price range. So let's go. So stocks grow exponentially. Stock prices grow exponentially. Companies grow exponentially. That is, they tend to grow more as they get bigger. There's a limit to that, but that's the idea of exponential growth. We can look at doubling times. That is, a growth rate of 15% gives you a doubling in about 5 years. And if you look at the chart on the right, the intersects, the 15% line intersects the doubling line at about 5 years, just as touched before. So what I've got here is the growth rates at various percentages from 0 to 50% every 5% along the way. You can see that the first three growths, 0% of course doesn't double at all ever, 5% and 10%, their doubling takes longer than 5 years. The doubling time for 20% growth happens in about in a little less than 4 years. The doubling for 25% happens in about 3 years, and then 30% here happens in about 2.5 years or so. So this is not actually what the front of the SSG looks like, because it's not scaled arithmetically like this is. It's scaled, it has a log scale. So I've done that here. And what that's done to these percentage growth rates is turned them into straight lines. So it's easier for us as human beings to see to compare straight lines than it is to compare curves. So that's why they do that. Doubling times are the same. None of that has changed. Just the shape of the graph has changed. So the rule of thumb that at least I've taken out of this, is that it's unreasonable to think that a company is going to double, a company of any size anyway, is going to double in less than, say, 4.5 years. So that's 25%. So if you have a growth rate of more than 25%, you probably need to say, well, maybe it's growing that fast this year, but it's not going to grow that fast in the next 5 years. So there are a few rules of thumb that the SSG or that the Better Investing has mentioned over the years. Okay, so the SSG trend lines for earnings and has been growing. So when you project what's going to happen in the future, you shouldn't expect a big improvement in the growth rate. That is, it should more or less match what the company has been doing the last 5 or 10 years. There's some exceptions to that. If it's suffered a disaster, if there's a company, a factory that blew up, or say there's a pandemic, then you can think about at least temporarily, the growth rate coming higher than than the trend has been. Mergers can also change growth rates, either for good or ill. They can make the company grow faster if it's a good fit, or they can, if it's not a good fit, they can slow things down. So you should always compare your estimate to the long-term trend. So we'll look at a couple of examples. I represented Five Below last month, I think, as a stock to study, and so I just happened to have my version of it here. You can see that this is kind of what we like. This is the front page of the stock selection guide, and the lines are pretty good looking. They're up straight and parallel. There might be a touch of a decline in the last year, but they're pretty nice looking. So we can look at the growth rates, the trend lines, these red lines back here for all three earnings, profit, and sales. They're all going up at a pretty good clip. What I've done is more or less similar growth rate to the future. So I think I did this before I took into account coronavirus, and you might want to knock those growth rates down a little bit because of that. But the idea here is that you shouldn't, that the trend lines give you at least a first guesstimate of what the growth should be in the future. It's not going to be it probably is not going to be higher than that. Okay. I'll show you Ulta Beauty. So this is a company that it also looks pretty good, but you can see that the earnings, sales, and profit have all kind of leveled off in the last 2 or 3 years. This happens often to a company as it grows, but we think the problem here is that there's been some competition for these guys, for Ulta, from Sephora and other online retailers. So that's the cause of the flattening profit, a little reduced earnings and a little reduced sales. So what I've done is what I just said you shouldn't do, and that is to say that it's going to grow faster than it has been growing. I'm especially not going to say that anymore because of the pandemic, but I projected a growth rate a little higher than the projected growth rate, than the trend was. So this kind of change in slope is probably not a good thing. I also projected that profits would rise faster than sales, which probably isn't a good thing either. So I put the historical numbers down here so you can see them. So the estimates for the future growth are lower. So you can see the earnings growth rate here is this line. So it's lower, but I think it should be lower still, especially now. So I'm predicting an improvement versus the recent trend anyway, and that probably isn't good. Okay. So where do you find the growth rate and value line? Well, it depends upon which type of sheet you have. Essent is a small company, so Essent is a small company, so they have a small company sheet, and annual rates down here are historical. That is, they're saying what happened for the last 5 years and the last year. The prediction you want to look at, so this is an enlargement of that, so you can see the growth rates are pretty spectacular for Essent over the last 5 years and last year. but their prediction of what the future holds is down here in this little line of extremely small type. I'll enlarge that. So they're saying that the consensus 5-year earnings growth is 10% per year. Annual rates. And these trend line rates. Okay, for a regular SSG, I'm sorry, for a regular value line, that like Ulta here, the annual rates are both historical and predictive, and they're down here in the lower left-hand corner. I'll blow that up so you can see it. So this company's sales has been growing at about 20 to 22%, but they're projecting sales growth of only 10% out to 23 to 25. The earnings has been growing even faster, 35% to 26%. And they're saying that's going to grow 9% in the future. So they're essentially saying that the slowdown in growth that we could see on Ulta on the trend lines is going to continue and get worse. So I think I had numbers much higher than this. Okay. Analyst estimates also can give you growth trends, but usually for shorter periods of time, for the next few quarters or two. They're available from many sites. I just looked at Ameritrade's profile for Ulta that shows the history and prediction of quarterly numbers. And this is it. I've turned on the high and low estimates so I could see how variable they are. And I'll blow up the last couple of years. So Ulta's last year, they beat the street estimates twice, and generally showed nice growth. But the predictions for the future are just crazy cakes. Next quarter, or their next announcement is May 28th for the quarter ending in the end of January, and they predict a tremendous range from minus 97 cents to $3.13 for the first quarter of 2020. So that's just bananas. And the next quarter, the range is even bigger than that. So some of this is because the timing of the estimates is not all the same. That is, some of these are from a few months ago, and some of them are for right now. So that accounts for some of that variation. But it is amazing how much variation there is among the analysts, and that by itself tells you something. Okay, so let's look at future PEs from the value line. This is, again, Ulta's full sheet. The last column has predictions for 2023 to 2025 for all kinds of stuff. Sales, earnings per share, and here is the annual average PE ratio. That is, this should fall between your low expectation for PE for the future and the high expectation. And if it doesn't, then you should rethink your numbers. Conclusions. Judgments on companies are hard for even for analysts for things like growth, and as Yogi Berra predicting is hard, especially about the future. Don't buck the trend lines unless you have a good reason. Let various data sources guide you. And there are many other resources that offer advice on how to do judgment in the BI website, including webinars and articles. Thank you. Any questions?
Thanks, Jack. That was Excellent. And I must admit that when I see a company that I'm looking at has one of those simplified value line sheets, I always kind of roll my eyes because it's like, okay, this isn't going to be very much help. But I learned something today that they actually can have analyst estimates for earnings per share growth. I guess in all these years, I've never read the little fine print to know that they actually did do some amount of analyst work on it.
Some companies don't have that, but most companies that I've seen do.
Right.
Jack, yeah, you may want to point out that the online version of the SSG has a research tab, which quickly could bring you to a whole handful of different analyst estimates.
That's right. The links for various services is really nice, and there's also a link that takes you to a summary of what the Better Investment community has estimated for that company. So that can be helpful, both to see what outlandish things there are and what that on average it actually seems pretty decent.
Okay, excellent. Why don't we, if you still have presenter rights, do you want to move right into the minutes from last meeting?
Yeah. Let me get out of this. I can get into the minutes from last meeting. Okay. Make this bigger a little bit. Whoops. Okay. So we had an amazing attendance last time. 70 people registered, and we had 34 visitors. All of them. There's a list of the visitors at the end. I'll get to that in a second. The minutes from last time were accepted last meeting as presented and refiled in Vivio. Treasurer's report was accepted as presented. And these were our positions last month. 12 stocks, I think. Yeah. And this is the diversification by size anyway. And we're a little light on small companies. We just have one representative at the moment, Essent. There's the goal for BI clubs is to have about a quarter of your companies in, or a quarter of your investment in small companies. Medium companies are in the blue. That's not far off. We're about 45% or something. And we're over half large companies. So that's much bigger than the goal of 25%. Okay. So we need to emphasize medium and small companies if we can. That's buying them in the future. I represented Five Below last month, but we decided to buy more Middleby, the Middleby company, which does restaurant equipment. Steve presented the mathematics of percentages last month and a BI presentation on the meaning of the value line. That is, what does that line on the value line sheet actually mean? Steve needs to check that he had filled out the volunteer sheet for Better Investing, and I'm happy to report that he did. In May, Brent will present the stock to study, who in a minute, and I just presented the education. I report the visitors to the Better Investing website. Steve also used Altman Z, and you can get Altman Z, which helps tell you whether the company's going to go bankrupt. It's available at Chartmill and probably other places as well. I think I saw Excel sheet that tells you how to make it. And this is the list of so we're going to meet today. This is a list of the visitors. We had three of the visitors: Sriram Matabushi, Elizabeth Tobin, and Marilyn Westmus, that all expressed interest in joining the club. And I think they're all with us, although I'm not certain of that. They're all with us today. Okay, that's the secretary's report.
Thank you. The one change that I would make at the top of page 1, I think you have today's date instead of last month's date.
Oh, yeah, it must have done that to me today.
Okay. Otherwise,
April
I have
11th.
no objections to these.
Great.
Okay. Thanks, Jack.
Great.
Ira, I'll hand it over to you for treasurer's report.
Okay, here's the current holdings. We're using Vivio for our accounting software. We have $789.98 in cash, and all member payments are current. Okay. Member status. Transaction history report. Purchased 14 shares of Milby at 56.06. And we picked up some dividends here in April, Dollar General and Gentex. Performance benchmark. Since inception, rate of return 10.7 versus being at 511.3. Looking shorter term, 13.5 versus 13.9. Investment performance. Regeneron tops the list right now. And member performance. Any questions?
That was good. Thanks, Ira.
Okay, we're up to you, Brent, right?
Yep. Okay, so I am presenting the stock to study this month. It's D.R. Horton, symbol DHI. And let's see, make sure that I'm sharing everything that you can see. So for those that have not been with us before, we use a kind of an Excel form just to gather our thoughts into a standard format to present the company that we're reviewing for the month. So this is this one that I will walk through here momentarily. I also just wanted to show briefly the toolkit application, or actually the stock selection guide, or the SSG, which is what we've referred to before, excuse me. This distills down in 2 pages. This is the front, and then this is the back. It distills down in 2 pages of calculations and graphs, a compact, easy way to review a company's health and better allow you, the user, to predict future revenue and earnings growth in order to predict a future stock price, to determine whether or not a company is worth investing in. The software is by no means required. You can do all these calculations on paper, and in fact, before the software was popular, there used to be classes to, with colored pencils and everything, to plot out the data on this chart and do the calculations on the back. This software just makes all of that a lot easier and actually connects automatically to the database of financial information, so you don't have to dig through value line reports and otherwise. But by no means don't think that this is software that we're trying to sell you or anything. It eases how we can calculate this information. And this is our standard analysis approach for this investment club, using this SSG. So I won't walk through all the features here right now. I'll instead start with the spreadsheet, and then we'll touch back on the SSG in a little bit. So as I mentioned, DR Horton, DHI, they're traded on New York Stock Exchange. And as Jack had mentioned, we are a little bit overweight with large cap stocks, so it'd be ideal if we were to get more medium and small. So of course I decided to present a large cap stock this month, as well as one that is geared towards building homes, which we may see is not really the most conducive to a stock to invest in the middle of the pandemic, but to each his own. I had presented a different construction company, I believe, in January of this year, whereas DR Horton actually is, I believe, the market leader, if not one of the largest, if not the largest, one of the largest in the industry. So they're mainly involved with construction, sale of single-family homes between 1,000 and 4,000 square feet, price range between 100,000 and 1 million, really geared towards first-time buyers. Their Express Home product line is it's kind of an entry-level product, and fairly recently was started in that company, launched in 2014, which now represents about 1/3 of their revenue. So they're really going after, I think, the first-time home buyers to get them into a home as easy as possible. They're one of the largest domestic builders by number of homes sold in 2018, and the most geographically diversified. And I believe Joe, our organizer here, one of his relatives actually works with them. I think they're focused mainly in the southeast area of the country. Operates in 29 states. Looking at their cash to debt ratio, it's about 21% on value line, 29% looking at toolkit. Our general rule of thumb is below, like 33%, below 1/3 is what we like to see. I rated it as a growth company. Looking at their history, you could argue whether it's going to be a growth company looking at their future, but we're averaging about 18% average revenue growth over the last 7 years. Looking at Morningstar, their estimated sales is down, unfortunately, to around 6% through 2019. They don't have any moats, but there are some other advantages that we'll touch on a little bit later with this company. They ranked a fair value at $52. 5-star price is 31. Their star rating is 3 because of the current prices, I think around $49. Value line estimated growth was 6.5% as well. Earnings per share growth was 7%. A timeliness of 1, safety of 3, and technical rank of 3 as well, with a total annual return of between 4 and 13%. So not huge, like rocket ship growth rates here, but I don't know. I've never been through a pandemic before, so I don't know what we can actually expect in the month and years to come. From CFRA, S&P, their recommendation is a hold at 3 stars. Their 12-month target is 51. And the main risks that they mention are, like everyone probably in this call would understand, recession from the pandemic, weaker demand with affordability pressure from unemployment, salary cuts, and lower consumer confidence to buy a home. I personally, I question whether, I know the economy is going to take a hit. What I don't have a good idea on is whether a lot of the folks that were going to jump into buying a home are necessarily affected. I know a lot of people have been working from home, have had continuing wages through this period. So it might be that this company doesn't take as major of a hit as what people are fearing. Some positives is that there's very strong balance sheet, and the size of the company itself helps with bargaining and getting good deals on various materials and other supplies. Projected sales growth, so I looked at doing it fairly conservative at 6%, judged down from the 18% historical for the last 7 years, as well as being in line with some of the analyst estimates. And then I just pegged the future earnings per share growth to be equal to the sales growth. As Jack mentioned in the presentation earlier today, you can, on a short-term basis, sometimes estimate a higher earnings per share growth in sales, but it's not good to do it as a rule of thumb, just because at some point the amount of earnings you get will exceed the amount of earnings that you will require will exceed the amount of raw income or raw revenue that you're getting in the front door, which doesn't make mathematical sense. From a management standpoint, their pre-tax profit margin is 11.6, and that's on an upward trend. Earnings on equity 16.8, and that's on an upward trend as well. PE history has been around between high of 14 and low of 9 for the last several years, down to 12 and 9 for like the last year. Looking at risks and rewards, good things is the company size, its diversification of locations. Housing is still needed. I know certainly here in California, in the Los Angeles area, we're hurting for homes, and the home prices are still at an all-time high. So there's really no lack of demand. To be determined how the pandemic, though, affects those things. One thing that I saw was this company uses options for land instead of buying the land outright. So I believe that lowers their debt load, which is good. Bad points, there's no moat for this, and economy recovery is unknown, as well as, impact to people's wages, as well as the new home buyers. So I predicted a high price over the next 5 years of 82.7, low prices 39.9, forecast low price. The zoning, I had to buy up to $50.60. Granted, this was a more attractive stock when I pitched it, I think, like last week. It's since then gone up by several dollars, which I was thinking we have kind of a 2-point Midas touch for this club. It's that when we buy a stock, the price immediately goes down. And when you pitch a stock the week before the meeting to review, the stock price immediately goes up. So my sell zone was $72, and then currently it's at $49.59. So that gives us an upside downside ratio of 3.4, just over the rule of thumb 3 to 1 ratio. Relative value is 78%. And then compound annual returns 11.7, and projected average return to par is 7.7. So this is one of those, I think it can be a risky play. There's unknowns in the economy. It is a large cap company, but it does have a very strong balance sheet. Granted, that's for results that were before the pandemic. So all bets are off as far as what the future holds, but they do have a good market share and diversification of locations. Wanted to just walk through the SSG again real quick to familiarize those folks that are not familiar with it. Up in the upper right-hand corner is just some company information when the prices was pulled, who did the analysis, what sector it's consumer cyclical, and it's residential construction. It shows total debt, total number of shares, and then what the percent debt to total capital is. So this is at around, a third, 33% or so that we like to see. Lower than that is good. Too high a debt just means that they can be over leveraged. And in the case of economic downturns or everything, are they closer to bankruptcy if they're carrying too much debt? This section 1 is the visual analysis. Jack touched on it in his presentation. It plots the yearly revenues in green, the pre-tax profit in pink, and then the earnings per share in blue against a logarithmic scale. So straight lines basically mean constant percentage growth rates, and so the lines for those percentage growth rates are kind of plotted here at the bottom. So what we like to look for is up straight and parallel lines, which means that they are growing and that management is able to convert the growth in the green revenue to be the pink and blue pre-tax profit and earnings per share. So they actually can make profit from the raw revenue that's coming in the door. Quarterly comparisons are up in the left-hand corner. And then my predictions down here are at the bottom. Historical are the 18.5 revenue and 22.5 for earnings. And then in the green boxes are my predictions of 6% growth for both of those going forward. And you can see here that that's kind of in line with the revenues. The earnings per share and pre-tax profit have kind of actually spiked up at a higher growth rate than that, but I kept it somewhat conservative. Flipping to the back, second section is quality analysis, where we look at kind of management's ability to turn the revenue into profits. These are the values that I mentioned before, the pre-tax profit margin, 11.6, which is on the uptrend, as well as return on equity, which is up. And then I don't know if we refer to it anymore, but I was taught that between section 2 and 3 is kind of what we consider a barbed wire fence, that don't go any further unless the visual analysis that you did on the front page, as well as the quality analysis here, make it look like a good company. Because you can get a bad deal on a good company if you overpay, but you can never get a good deal on a bad company. You can't pay money for a stinker company that's not going to return good growth to you. Section 3 is where we look at the price history and PE history. And then section 4, where I had set the high and low PEs, 14 and 9, to predict our predicted high share price in the next 5 years of 82.7, and then the low of 39.9. So that gets us just into the buy zone, just over the green line into the buy zone at 49.59 currently. And then, like I mentioned, the growth rate of 11.7 compounded, and then 7.7 projected average, I should say. So all in all, it appears to be a good company. We might rank it as a little bit overpriced and risky, just because of, if wages and jobs are insecure, people might not be getting into the home market. We could also argue that maybe those folks that have questionable wages weren't going to be getting into homes anytime soon anyway, so it might not take much of a hit. And that was it for me. Any questions, comments?
Yeah, I pretty much agree with your buy hold. Depending how I did the SSG, I was right at the cusp of it. Value Line has a summary and index which comes out weekly, and just to point out, their timeliness has dropped to 2 from the 1 from the older report. So I agree. It's buy hold. It's a large company. I wouldn't rush into it at this point. The investment advisory service, if you subscribe to that, covers it. And they have a buy up to 51, which is very similar to what you're getting and what I'm getting.
Mhm.
That's what I have.
Yeah, I got similar numbers to you, Brent. Mine ended up in the hold, but just by a couple of bucks.
Yeah, it was a fine line depending on what you predict for growth rates there,
Yeah.
or the PE ratios. That makes sense.
Yep.
Out of curiosity, if this was priced lower, like a bit lower, like 45 or so, do we think, does anyone have a better idea on what the economy will look like? I don't have a good finger on the pulse for, the home buying market to know if everything freezes and companies like this will just, go stagnant for a year while things recover, or do we think that, if you were geared up to buy a new home, pandemic or no, you're going to go forward with it?
I think I read that their orders were actually up the last couple of weeks of the quarter. I think they just reported, right? But that,
The orders are down 11%.
yes, but they said signs of increase over the last 2 weeks. So yeah, you're right, 11% year over year, but their business was picking up at the end of the quarter. So that's not a lot to go on.
I can say one thing non-proprietary. My son says that they're building houses and streets and subdivisions as fast as they can in San Antonio, where he works.
Yeah.
Are a lot of those on spec?
Almost all of them are on spec. They usually get a house somewhere around 45 or 50% complete, and then folks come in and decide what type of brick on the front, what type of wood trim or whatever, and what type of tile or carpet floors, and what type of cabinets and things like that.
So it's a little riskier than if they had contracts.
Not much in there where he is. They're building probably 20,000 homes a year in the city, not just his company, but 20 to 25,000 homes a year get built in San Antonio. So, and there are 15 national home builders that are there, and they're all busy.
That's good to hear. So Brent, I have some thoughts.
Sure.
So let's see. If you could just throw up the first page of the SSG.
Yeah.
There we go. So right away, the first thing that I see is it doesn't pass my litmus test for sales, which is generally I like to see the current sales doubled, and that puts up a little flag for me. But I think this is an exception, and then probably not the rule. Because I subscribe to Stock Central, my SSG is auto-filled, and I left it alone, and my buy zone was all the way up to $55.60. So it's still, at least on my SSG, plenty of room. Is comfortably in the buy zone. I really I did a comparison on the Fidelity website versus the other home builders, and they have relatively low debt. So I thought that was very, very good. I did also happen to look up the Altman Z number, which is it's a bankruptcy indicator, and their Altman Z was 4.84, which means that they're not going to go bankrupt anytime soon. I also did happen to do a quick news search on them, and I happened to notice that obviously companies are going and they're shoring up their revolving credit and their credit lines and things like this. And so one of the when they issued a bond, the bond rating companies rated them Baa2, which is investment grade and not junk, which I thought was critical. So I thought that was excellent. So this means that this is a quality company, at least from the bond rating agency standpoint. And I thought that was excellent. It's on the kind of the upper side of the lower medium grade bonds. So I thought that was a very, very good point, especially that the rating agencies weren't taking the scalpel to them. The other point, of course, I'm about an hour and a half out of New York City, so I get a lot of the New York news. And there are people leaving the city. So that's going to cause people are, I think, maybe not in LA, but in New York they sure are. They're leaving the center of the city a little bit. So obviously I don't think Horton is up here, but you're going to see people, going to housing. So I think that on a longer term trend, to answer your question, I think that's actually a good thing, a positive for the company. I had one more thing. I happen to work in a building that has Toll Brothers in it. So I'm familiar with their comings and goings, and it's certainly people want good new housing. So I guess I'm in Ira's camp with this one, in the sense that I'm not sure how the economy is going to break here, whether we're really coming into a V or a U, or this is really just a W right now. My gut feel is that we're in a W. So, and this thing's 52-week low is like 25 or something. So, and my projected low on this thing was above that, actually. My projected low was 37.2. So it's been volatile, but everything has been. So I don't know. I guess I would take the wait and see, but maybe I'll put it on a watch list. Thank you.
Okay. Good discussion. Thanks, everyone. Then moving on, let's talk about our review of stocks in the portfolio. Ira, can I take it back to you to put the Viveo list up for current holdings?
Sure.
Okay, so I will kick off. FleetCor Technologies, quarterly earnings surprised analysts again. It was positive. Earnings per share was up 12% before shutdowns. They have suspended their 2020 guidance until things settle down, and that's a couple of the companies are, I think, doing the same thing. But they do expect a bit of a decrease in revenues due to the lockdowns. One thing, they took a $90 million one-time hit for one of their sector or segments due to a customer filing voluntary bankruptcy. That the bad debt is a very rare occurrence in that part of the company, so they're not expecting a repeat of it, but it still hurt their bottom line. I would have thought, and this is my own analysis, not a news report, but I would have thought that FleetCor would be one of the companies that does well during the lockdown, because as Joe can attest, I think we're still, doing shipping and everything else, and if the, cash cards is being used for truckers and other freight entities, I would imagine they're still getting a good revenue at a good clip, but we'll see after the next financial presentation.
There would be a little bit of problem there, because a lot of the truck stops do not open up the places where they can shower, do not open up the restaurants, and limit the amount of things that they can buy in the, call it the 7-Eleven part of the store. So volumes may drop slightly during the COVID period.
Okay, that's good feedback. Thank you. Okay, onto a theme. Oh, I'm sorry. So for FleetCor, I had them at $240. Our buy is up to $233, so it's currently in a hold range. For a theme, their CEO has been very optimistic as far as how they can weather the economic downturn. They report $7 billion in deployable capital, $5 billion in cash, and over $500 million deployed in first quarter. The CEO was quoted as saying, while the COVID-19 pandemic caused market-to-market volatility in Athene's financials during the quarter, we believe these impacts will be transitory and have little impact on Athene's long-term earnings trajectory. Then he goes on to say, we have record levels of liquidity, a proven ability to take advantage of dislocation, and I'm confident that we will emerge from this crisis even stronger before. So I thought it was, hopefully no one that was affected by the downturn in the economy was on their conference call, because it was I almost got the sense that they were kind of salivating that they were going to be able to get a lot of good deals out of it. But anyway, I currently have them in a buy range at $27.30. Our buy is up to $49. And then finally, Tractor Supply, looking at their charts, they actually have a higher stock price now than before the pandemic hit, which is great. They've rolled out same day delivery has been expanded to all of its stores, partnering with a company called Roadie, which has about 150,000 drivers. And I think they said the one value was that they can get to 89% of the households in America or something like that. And they really expedited this initiative in response to the pandemic. So I think they saw what was brewing over in Asia and kind of expedited this project to make sure it was rolled out completely before it hit our shores. Their first quarter sales rose 7%. They attribute this to consumers kind of hoarding the feed and other daily consumables. Some kind of nice to know information about them. They said that they are now covering 100% of any of their employees' COVID health related treatments. They've suspended their share buyback, and they're increasing cash on hand to be able to weather the storm even better. And they're keeping their dividend flat, but still going to honor paying the dividend. They are currently, share price is $107.60. Our buy is up to $66, so this is in a hold range for me. And that's it. Steve?
Okay, so Visa reported earnings. The earnings that came out were good year over year. For the same quarter, they were up. It's a fortress balance sheet, and because it's a fortress balance sheet, things barely down. They see a downturn in spending, but it wasn't as big as I thought it might be. And the forecasts for the next quarters are down. Surprise, surprise, but not huge. And I have this in the hold range for Visa. For Alphabet, earnings came out, and they were down, but they still pumped out $9.87 a share. Year over year, they were up for the same quarter, and obviously this is the fortress balance sheet, and it is barely down. So advertising revenue was down significantly, and obviously as the pandemic goes on, it's still going to be, but as things open up, hopefully their advertising will come back. And I have this just in the hold range, just out of the buy into the hold. As far as Middlebury, they did have report earnings. Their earnings were year over year, they were higher. So they must have been the first 2 months came out. This is not a fortress balance sheet company by any stretch. And right now, this thing seems to be deeply valued to me. Obviously, they're in commercial food service, food processing, and residential, the resident like Viking. So they're, it's going to take a little while, I think, for them to perk up, as the restaurants aren't even open yet, really, except for takeout. So, and this is not a good sign. The company, the C-suite, the executives gave up their pay, or they're taking a cut. So that wasn't too swift. But I do have this rated as a buy, and it's currently at $64.35, and my buy is up to $98.20. So this is a long-term hold for me, and it's certainly well within the buy range. I mean, people are going to have to eat. It's just not these services, especially the commercial food service stuff, is probably going to go very quiet, and there wasn't a lot of news on this. So that's what I have. Thank you very much.
Okay, I have Lithia as a buy right now, up to 124. It's at 114. The first quarter earnings per share for Lithia was $2.01, which beat the 198 estimate. Revenues did fall 1.6% year over year, and this is due to the virus. New vehicle sales are down 9.5%. Used vehicle sales are down 13.8%. So near term, Lithia is struggling somewhat, but I do have it as buy still. Regeneron's been on a tear. I have a buy up to 383. They're at 563. Their earnings per share were up 48% to 660. The estimate was 573. The sales were up 33% to 1.83 billion. Estimated 1.74 billion. Regeneron is starting human trials in June for a treatment for the virus. Gentex is also a hold. They're at 26. I have a buy up to about 26 as well. Their earnings per share were just a little bit off at 36 cents versus 37 estimate. Sales were 453 million versus an estimate of 467. So they've missed on both. So Gentex, being in the auto business also is short term is not doing that well. So I have a hold on that. Like I said, hold on Regeneron and a buy on Lithia.
We have a question from Dennis Lemar.
I need to finish my. Oh yeah, go ahead.
Mr. Lemar?
Yeah, I'm here. I didn't have a question though.
Well, your hand was raised. If you didn't, that's fine. I will. We'll go
I'm
on
sorry.
Okay.
I probably mistakenly hit something.
I'll continue with my stock report. Essent is down a little bit, 7% over the month. It reported earnings yesterday, and it beat the street's $1.39 with $1.52 for the first quarter. Its revenues didn't quite meet expectations, but I saw one group that said it did, and everybody else said it didn't. So I don't know how that'll shake out in the STAR report in a couple of weeks. So it's still our only small size company, 7.2% of the portfolio at the moment. They did reaffirm the dividend, 16 cents a share, about 1% yield, and it's a buy. Dollar General is near record highs. It's up 5% from last month. It reports earnings at the end of May. It's now our largest holding at 13% of our portfolio. Oh, I thought it was interesting. It's going to hold its annual meeting by virtual means only, they said. And guests are welcome to listen in. It opened its first store in Washington in the 46th state it's operating in, so it's still growing despite the pandemic. And it's a hold. Ulta, remarkably, is up 13%, and I don't know why. Its next earning report is May, so it wasn't their earnings report, did it? It's also a buy. For the pandemic, it's been doing curbside pickup service in many of its stores. And this week, last Monday, they reopened 180 stores in 7 states with safety measures in place, including masks for associates, and customers are encouraged to wear masks. 6 foot distance between customers, the usual. Fewer people allowed in the stores. Some states have allowed hairstyling with some safety protocols. And they're also a buy. Ulta's a buy. That's it for me.
Okay. Thanks. Anyone want to make a buy or sell motion?
What about the watch list?
Oh, sorry, the
watch
watch
list.
list.
Yeah.
They're all, well, let's see if I can. Once again, I've been turning off stuff to try and make my computer go faster, and so I dropped the watch
I
list.
can tell you that Five Below is still going up. It's in the 90 range now, and so definitely a hold.
Five Below is a hold, yeah. Viva is a hold also. I looked at it, and it wasn't. It was way over my buy zone. I'm not sure I have your Viva report, Steve.
Yeah, I probably forgot to upload it into Vivio. I'll have to do that.
But they're up so high. I doubt that it's a buy. And what's the third one?
Yeah, I just did the SSG on it, and it's way out of the buy zone.
Yeah.
Way out.
Yeah. And I can't remember the third stock.
Facebook.
Facebook is a buy, but I'm not sure we want to buy it. And I'll add, well, we can decide whether to add DHI or not to the list. They seem to be a good candidate.
Well, I marked down which of the companies we think are in the buy range, and just going by as a percent of total portfolio, Middleby, I think Steve mentioned that they were in the buy range. They're at 4.3%. Would we want to just try to top off our holdings to bring them up in line with the others?
Yeah, I agree with that.
Yeah, I second that.
It sounds good.
Okay. We'll buy Middleby with the $789 that we have.
Okay.
Is it worth adding DH Horton to the watch list? I don't know what we would be necessarily buying, like watching for, like maybe for it to drop significantly in price, like low 40s or something.
I propose you drop Facebook since no one ever wants to buy that one, and replace it.
I agree, Ira. You're right.
I think that's good. I'll drop Facebook and add DHI.
Okay. Any other motions for buy or sell? All right.
We'll buy
Beyond that,
Middleby
I'll-
with available cash.
Buy Middleby with available cash. Yep.
Okay.
I'll take presenter rights back, Ira, so we can see the agenda. For old business, I forget from last time, the standard of conduct. Steve, is that all wrapped up now?
I think it is. Although I did get one email that I didn't respond to. I know Jack responded to it, but I didn't.
Yeah,
and I'll try to get to that this weekend.
Yeah, I think I got a request to do something, and I am still unclear about exactly what it is I'm supposed to do with the Yankee satellite group, which is a new thing that a new sub chapter maybe is what it is.
Yeah,
Oh,
we
I
want
said
you to be the lead, and you agreed to be the lead for that.
I said I'd do it, whatever that means,
Yeah,
whatever it is.
whatever it is. Yeah. I recommended you, by the way.
Oh, thanks a lot.
I got the
appreciate it,
email.
Ira.
I got the email, and I said there are two other people in the club who have volunteered, and maybe one of them wants to do it.
Good.
The idea is your general area has a fairly large number of people that are better
Right.
investing members. So they established that satellite, and they needed volunteers that are available to go teach class, deliver the 5-year certificates, in general, answer questions in that area as a representative of the online chapter.
So I thought that would be great. I'd be glad to visit and give a talk, or strong arm one of the other members to give a talk.
That's the base idea for right now.
Okay.
There are, if I remember correctly, 9 or 10 satellites in the online chapter.
You don't have to do it alone. If it's safe to go, I'll go with you.
Yeah, I mean, in-person visits really aren't a thing in Massachusetts anyway, in the New England in general.
Okay. Well, I guess, yeah, Steve, look into that, whatever that email is, and try and decipher what they want from you, if it's still another signature or something, and then report back, I guess.
I think
Yeah,
they're
I
all
think
good.
it's the same thing that Jack got, and to be honest, I need to support Jack. If he goes on a chapter visit, I think that's something that both of us could do at the same time, and it would be supportive and a learning experience at the same time. So yeah, I need to fill that email out.
Great.
Okay, moving on to new business then. The new member packets. I think this was something from email exchanges, Jack, that you wanted to talk through. Did you want to show what you have already, or do we just need to talk through what the content should be?
Well, let me show you what I have. There's can I get the presentation back again?
Yeah, I'll give it to you here. In Bivio, I put the new member packet, which I've already distributed. I think most of the stuff to 3 people that asked about it this month. But so there's that we have always had the investment policy statement, the operating procedures, and the partnership agreement are in the new member packet. I added this note, and I'll open it up so you can see it. Excuse me. The Bivio has said that these states, Georgia, Indiana, Missouri, New Jersey, New York, Oregon, Pennsylvania, and West Virginia,
all ask out-of-state investment clubs to file a tax return if any member lives in one of those states. So we're going to say we will not accept a new member from one of these states, but they're still welcome to visit the meetings. And then we're also, because for similar reasons, currency exchange issues and tax issues, we're not going to accept anybody from any foreigners in, just U.S. and its territories. New thing.
I will say that if there are any listeners that are from those states, like Jack mentioned, you're more than welcome to continue participating as a visitor in the meetings, and we are certainly open to answer any questions if you so desire to start an investment club with your friends and family, which is really the reason for the model club. It was to, give an example of a fully functioning model club with the thought that folks go off and start their own with those that are, more closely associated with them. Okay, this looks good.
The second thing I did was to try and put in one document the steps to becoming a member of the Yankee Model Club. So this was just an expansion of an email that Ira sent. So you have to be a member of Better Investing, which I think most of the people visiting are, since that's how they found us, is through BI. You have to attend 3 meetings and have access to Value Line. And I made a list of the Fairfax County Library and other libraries that do non-resident online cards. Check with your local library, because they may have Value Line available, and some of them will have online access. And then subscriptions to Value Line range, depending upon how much of their stuff you get, from $200 to $600, as far as I can tell. So access to Value Line, present an SSG for the company of your choice, so we'll have to schedule that. Current members must vote to accept you in the club. If you want to invest less than $200, current members must agree. You have to sign a partnership agreement, and then finally arrange for direct deposit of your monthly investment to our broker Ameritrade, and we probably have to sign some more stuff for Ameritrade. And that's a new.
Okay, on this, do we need to mention anything about like reading the, what are they called, the club procedures?
The partnership
agreement. I didn't put that in here, but that we could say that they have to do that.
Yeah, well, the partnership agreement references the operating procedures, and you agree to them by signing the partnership agreement.
That sounds right. Yeah.
Yeah. Okay.
Although I don't think it would hurt to explicitly state that point that you brought up, Brent.
Yeah, maybe read operating procedures and sign partnership agreement or something.
Yeah. So the partnership agreement folds that in, but yeah, I should make that explicit.
Yeah. Okay. Also, out of curiosity, is the Fairfax County Public Library, is that $27 a year or just $27 one flat fee?
I think it's $27 a year.
It is. I use it.
Okay.
So I don't know where they're getting my money from, but mine still works, and I did it years ago. Maybe something's changed since then.
Yeah.
Or maybe I don't have control of my finances.
I've been paying an amount of money every year for more than 10 years.
Huh. Okay.
Yeah, I pay them every year. I don't know how you get away with it.
I don't know either.
Maybe he's been around so long that they grandfathered him in.
Yeah. Oh, okay. The other thing, do we need to have anything referencing, like, nice to have but not required is access to like a toolkit or a SSG software tool.
Well,
I think the SSG online comes with the membership, but I might say that
it does not
as
come
well,
with the
but
membership. It does not come directly with the membership. The membership is
software.
$40 or $50, but the software itself is another $60, $70, $80, whatever it is.
Yeah.
And if they're going to be full-time participants in the club, that means they're going to be doing SSG presentations, either Toolkit or SSG Plus or SSG Basic. So they need to do that as part of that process.
I should put that into that bullet item.
Yeah, I guess if someone was really strapped for cash, they could do it manually and scan in the paper and that we walk through, but I think I don't know that we would want the membership in our club to be contingent that they have it, but I think there's only good reasons to get it just because we churn through so many SSGs.
Yeah.
Right.
I did start my life as a BI member doing these by hand, but that's sold last century.
Yeah. I taught people up to 100 at a time how to do it by hand. I know.
Yeah. Okay. I think this, with the noted changes, I think this was good. Steve, Ira, do you have any other additions or changes for this?
Looks good.
Okay.
Yeah. Okay.
And then, Jack, I'm guessing that you'll keep track of the people that are requesting membership, if they come to the 3 meetings, and then
I'm sorry,
are you working
Brent,
with them?
I was cutting out sometimes.
Oh, sorry.
I just wanted to show you that this is now in a new folder on Bivio called Public, which has a link. So I can send out a web link to this folder, and people will see not all our files, but just the public files.
So there's some public setting that allows just that one folder to be exposed?
Yeah.
Yes.
Okay.
And I would also ask, it might be a good idea to put the club minutes in file so people can see them.
Mm-hmm. Okay.
Okay.
All right. So for the interest to the people that you listed that had requested membership, this month will be their second meeting that they've come to, assuming that they attended today. Is that right?
I think that is a correct statement.
Okay. So then if they attend next month as well, I guess we'll then schedule when they can present and then work through, if they want to work with one of us as members to help mentor them to do the SSG or find an appropriate stock to study or something.
Yeah. I think Liz is a session ahead of everybody else. This is Liz's third meeting.
Okay.
See, she's got a question. Yes. It's her third meeting.
Okay.
We have a question from Don. Can I open that up?
Yeah. Is it time for, I think it's time for questions.
Well, having trouble getting it to unmute. Here we go. Don, you had a question?
Yeah, can you hear me?
Yes, sir.
What is the telephone? I'm from Vermont, and what's the telephone number for the Fairfax County Public Library?
Give me a moment and I can look that up.
All right, I appreciate it. Thank you.
You could register online. You don't even need their phone number.
Right. But I think I have it available. 703-324-3100.
Great. Thanks a lot.
Certainly.
Okay, the one last piece of business that I wanted to mention, I think, Ira, you had suggested as an addition, the Visit a Club program that I think Joe mentioned in email.
Yeah, Joe, if you want to explain that, and we can vote on it.
Well, I can attempt to do that anyway. One of the programs that Better Investing promotes is a listing on the Better Investing website of all clubs that choose to have public visitors join them. That's not just model clubs, but any club that would like to have people, they're out shopping for new members, if you will. And I would propose that the model club should be on that list. The list is not exceedingly long right now for Better Investing for the online chapter. I think we only have something like 4 names on it right now, if I remember correctly. It's something like that. Let me see if I can get to it right quick. And basically, it's a sign up. You say here, you give them when you meet, which is online, and some contact names and stuff like that. And it ends up being on a list. Right now, we have 4 online clubs listed. Only 2 of the clubs are actually in the online chapter. That's Profit Seekers, which is in West Bend, Indiana, and the International Model Stock Investing Club, which is, I'm not sure where you'd say it's headquartered. The president is in Canada. The secretary lives in San Francisco. They have some members in Hawaii, and I think there's a couple of members in China. They do not do money. They only do let's talk, do presentations, and then they run a tracking portfolio. So there are a lot of different ways to get there. But we would like to see the model club be added also. Right now, there are 3 other model clubs that are included on the list just to give folks a place to go. They're the Space Coast Model Investment Club, the Louisiana Mississippi Model Club, which I am a member of, and the Lone Star Club, which is in Dallas, Texas. As we get more that are in the online chapter added, then we will probably drop those other 3 off and just keep it to online, to clubs that are in the online chapter themselves. So I would encourage you to consider filling out the application, which is on the BI website and not very long. It's just fairly easy. You end up giving a name, a telephone number, or an email address, your meeting date, and whether it's an in-person or online club and what city it's in. That's my presentation, guys.
I move that Jack does it for us.
Yes, sir.
They'll want a name and an alternate name.
I'll put Ira down.
There you go.
Okay.
Yeah, it sounds like a low impact thing that we can do, so I'm in favor of it.
It is low impact, and it's another advertising tool is the way I look at it.
Yep.
I see a new name on our list. It's not on our other list. Cosmos, is that a correct pronunciation of your first name? You came in fairly late, and I don't remember seeing you on our invitation list. Did you come in? I'm going to unmute you. Cosmos, can you hear me? Your microphone is turned on. Not hearing, I will remute him.
Maybe we should ask Sriram and Liz Tobin if they want to say a word.
Okay, I have unmuted Sri Ram,
And I don't
and
see.
Elizabeth is up there. I unmuted her also. Both of them are unmuted.
Great.
Hey everybody, this is Liz.
Hi, Liz.
Hello there. So yeah, this is my third meeting and I'm very interested in moving forward. I guess my only question is about signing the partnership agreement. Do you want me to print that out and sign it manually, or do you guys have like an online signing program?
We generally do it low tech, so we would, I guess the first point is no need to sign it until you're actually voted in, which will be after the stock presentation.
Okay.
But we do a low tech version where it's you print out just the signature sheet showing the header and the footer where it says the name of the document and the version that you're signing. Sign that and then scan that in or take a picture of it or something and get it to our our secretary and the treasurer, just so we have it on record.
Okay, so I guess the next step would be what? I obviously come to the meeting next month.
Yeah, I think. Forgive me if you've said this before, but are you familiar with Better Investing? Are you already a member? Do you already know how to do stock selection guides?
I am a member, and I've been a member for a while, but I haven't actually completed a stock selection guide, so this would be my first one.
Okay. I think that the next step would be next month might be too soon, but at some near-term month, maybe July or August, we schedule that you would actually be presenting the stock to study. I can share the analysis summary spreadsheet that I walk through with you, and it's kind of there's no calculations or anything that's done in it. It's just kind of a memory trigger to make sure that you're going and looking through all the different segments of the company and reporting back what the key financial information is, what the business summary is, that sort of thing, as well as actually completing a stock selection guide. Do you have either Toolkit or the online SSG as part of your membership?
Yes, I have the SSG Plus, and I think I have Toolkit as well.
Okay. And have you, do you generally complete SSGs for your own investment research?
I have not completed one yet. I've taken some of the seminars, but I haven't actually taken the next step of completed my own. So this would be a first for me.
Okay. I guess my suggestion, and the other members can chime in as well, I would recommend that you select a company that you would want to present, take a stab at completing the SSG and filling out the spreadsheets. And Jack, I think this is probably something else that we should maybe put in that public folder, is just the blank analysis summary spreadsheet.
Yes.
Take a stab at finishing that SSG and that summary spreadsheet, and then send it to the members. And we can, or it could be just one member if you want to just keep it focused. We can provide some feedback, maybe some comments and suggestions to tweak it, and then you'd be ready, I think, then to present it at a future meeting. Does that seem reasonable?
Yeah, that sounds great.
Okay.
So if you want, Liz, I could get on a Zoom with you or something and help you fill something out, so we can look at your screen as you're doing it, and we can talk about where you get the numbers from and that kind of thing.
Okay, thank you.
Hello,
So,
this is Sriram.
Yes, Sri Ram.
I hope you all can hear me. Yes, I really enjoyed last month and enjoyed this week's meeting. I'm very impressed with how detailed and systematic you are all. I'm very looking forward to one more meeting, and hopefully you will vote me in to join your club maybe next month.
Welcome. Same questions to you. Are you like currently a Better Investing member, and do you have access to the stock selection guide tools or online tools?
Yes, I am a member. I used to be a member till about 2010, for about 12 years before that. After that, I dropped out. I mean, I moved from South Carolina to Texas. At that point, we dissolved our club. And since then, I haven't been a member. But as of earlier this year, I became a member of Better Investing again. They reinstated me, and I have been playing with some of the portfolio, some of the stocks. I'm very comfortable doing some SSGs, using both SSG as well as SSG Plus. Like one of you pointed out, I actually started doing many years ago by hand, and now we have wonderful tools to use them. So I look forward to contributing as much as I can.
And
Sriram and I
value
have,
line access.
I'm sorry?
You have access to value line.
Not yet. I am going to subscribe to probably, I looked around here, local libraries. Last couple of weeks, I couldn't find any in the local libraries, so I will subscribe to the Fairfax and probably get the value lines from them.
Great.
Sriram and I have communicated by email a few times. He's from San Antonio, and I'm going to try to get with him where we can do a face-to-face the next time I go visit my son, which will probably be sometime next month.
That'll be wonderful. Yeah, look forward to that.
Hopefully you mean face mask, Joe. But
Yes, sir. Face mask to face mask, whatever.
Okay.
I saw that you can get face masks with your face.
Face printed on them. Yeah.
Face printed on them. Oh, that's wild.
What about the third person? Is he or she?
I don't see her here. Marilyn Westmus.
Okay.
I don't remember seeing her name on the list today as an attendee.
I don't think she's here at the moment.
Okay. Well, we'll see if she joins us in future meetings then. Okay. The last point was just for next month. In June, Steve, I have you down for presenting the stock study, and Ira for the educational segment.
Okay.
Okay.
Right, and that was it. Any other items that we need to discuss?
I think we're good.
Jack, it sounds like you have your hands full with we're buying Middleby. You're going to change out Facebook for DHI on the watch list. You're going to make some changes to the info packet. Do you want to just like delete out or just upload maybe an example analysis summary spreadsheet to that folder so that Liz and others can walk through it?
Yeah, I can do that.
Okay. And then regarding the visit a club, did we already get the application stuff in the email, Joe, or do we tell you that we're interested in you?
You can get it online.
Yeah, I saw it on
under volunteer resources. You'll find Visit a Club as one of the title areas.
Okay.
So I'll do that.
Jack, yeah, you can handle that also? Okay.
Yeah.
Okay, excellent. Great productive meeting, everyone. Thank you for all of the attendees that are visitors that came. I wasn't keeping up with the questions. Joe, was there a handful of ones that were asked kind of through the...
There were no common questions. I had some background type questions and some location for value line questions and a few things like that. I did have a suggestion from Bill asked that we put the agenda as a handout, and we will do that next month. That's something that when you send it to me, I will automatically add it as a handout for the for everyone to receive.
Yeah, that'd be great.
Okay.
Oh, can you somehow add it to like the actual GoToWebinar thing?
Yes, there's a place down near the bottom of the list. You'll see down at the bottom, chat, handouts, polls, questions, audio. I can put up to 5 handouts down there. If you decide that y'all want something else, you'll need to send it to me, because I think I'm the only one that can add a handout, and I have to do it. I can't do it during a meeting. I have to do it before a meeting.
Gotcha. Okay. Good to know.
Great.
Okay. Any other questions that we didn't answer? Feel free to contact Jack at the email address on the screen. Next meeting is June 13th, same time, 11 a.m. Eastern, 8 a.m. Pacific. Hope to see you again, and thanks everyone.
Cosmos, we'll look for you next month.
All right. Bye.
All right, thank you.
I'm going to close it down,
Bye-bye.
fellas.
Okay.
Goodbye, everyone.